Good morning, everyone. You are watching live daily market outlook for Thursday, 14th of March 2013, prepared like every day by Windsor Brokers. Highlights of the previous sessions and today's beginning of the day. Stronger dollar was the main significant point yesterday after upbeat U.S. retail sales that pushed the greenback higher against the majors, but top story comes from Australia during the Asian session with the data released, the employment data, employment change data that came in unbelievable 71.5 thousand new jobs compared to 9.5 thousand forecasted and 13.1 thousand in the previous release. Gave significant boost to the Aussie dollar against greenback that jumped as high as 103.80. The pair was congested under 103.30 previous highs, and then fresh strength came after the release of Australian data, and basically this is the main highlight of the Asian session. The fresh strength of sterling is seen at the beginning of the today's European session. It's still congested under yesterday's fresh high at 149.80, but slightly upside the line. The technicals on the lower time frames still see potential towards the upside. Similar situation is with the dollar yen that is jumping higher at the beginning of European session, breaking above the near-term congestion after the pullback from 96.70 found the ground at 95.40 zone. Dollar Swiss hovers around 95.20 levels, just under the previous high at 95.50, and remains so far well supported from commodities. Crude oil is again higher, running towards 93, which is just a few ticks away, and towards recent peaks at 93.44 and 93.38 seen as the next target. Well supported for now, seeing a potential for further extension higher, while gold is after initial strength being capped by 1600 psychological barrier, now regaining some strength following dip down to 1583.50, threatening return again and staying within the previously defined range of between 1564 and 1587. Still a lot of work seen ahead in case of fresh strength that needs to clear 1600 as initial barrier in order to confirm the recovery. From calendar today, as said, the important releases that came from Australia were number one, and then another significant thing is soon to be released interest rate from Swiss National Bank. Libor rate is expected to stay unchanged at 0.2, 0.25, with the monetary policy assessment seen as the next step, and seen actually as the most significant decision of the central bank about the future monetary policy. Other releases for today: employment change for the fourth quarter from Eurozone is due at 10 o'clock. It's expected to narrow by 0.1% compared to minus 0.2% in the third quarter. And then a bunch of data coming from Americas. Again, reminder, 1 hour earlier due to the daylight saving time that already being reinforced in the United States and Canada. 12:30 GMT capacity utilization for the fourth quarter in Canada is forecasted 80.8 compared to 80.9 in the third quarter. New housing price index for January 0.1%, consensus 0.2% release of December 2012. U.S. current account for the fourth quarter shows the widening up by to 111 billion US dollars compared to the third quarter's gap of 108 billion US dollars. Producer price index for February forecasted 0.7 compared to 0.2 in January, while the core PPI remains unchanged according to the forecast. 0.2% is today's consensus, and January's release. U.S. unemployment claims there is a mistake in the calendar. are due at the same time, 12:30 GMT, and 352,000 new claims forecasted in the previous week, compared to a more significant drop of the last week that dipped to 340 compared to 361,000 forecast. And these are the highlights of economic indicators that are due to be released or due to be released today. We're going to take a look at the technicals to see what are the expectations for the coming trading session, starting with the single currency. As always, euro against US dollar weakened the near-term structure, as you can see the chart now, as the fresh extension lower following yesterday's renewed attack at the previous high of 12th of March at 130.72, 130.64 was the highest level, and the double top was left confirmed on a break below previous lows at 129.50, with fresh extension lower so far reaching 129.22. Overall negative tone now. It's dominating in the near-term structure, as the current bounce of high at low, pardon, at 129.22 still holds below 50% retracement of the entire fall, and the 130.00 psychological resistance that is approximately at this area. We have 129.93 as 50% and the 130.00, and also the barrier is reinforced by descending hourly 55 days exponential moving average. Initial resistance is seen at 129.80, which is the highest seen so far during the overnight session. More or less the price is now congested under 129.80, and more significant 130.00. A slight improvement, I would say, if we can say signal of improvement, is seen on the hourly indicators that start to ascend higher. The RSI is out of the oversold zone, and they move now above its 7 days moving average, pointing higher, coming somewhere in the midpoint zone. That is giving initial signal as the price cleared the 10 days moving average and now is attempting above 20 days one. Still a lot of work to be seen, but according to the current structure, most likely scenario will be still not enough strength for a regain of levels at the 130.70 zone. These levels, break of these levels, basically is required to avert immediate downside risk, while any rejection under these levels could be seen as a threat of threatening a lower top and the fresh extension lower. 4-hour structure is prevailing a negative tone and seeing a more focus towards the downside, and our downside targets remain at 129.00 and 128.76, as well as 128.59 200 days moving average. The first one is psychological round figure support. Then we have 50% retracement of a larger 120.42 to 137.10 rally, and the 200 days moving average is set at 128.59. A continuation of the bear trend from 137.10 was confirmed by a break below the diamond continuation pattern on the daily chart that now signals further weakness and sees potential for a further extension lower, as the downside remains pressured by crossover of 20 days moving average over 55 and the 90 days one that keeps the upside limited for now. As that initial barrier is approximately 130.70, and the more significant levels are 130, 133 and 131.61, break of which would signal possible reversal. Otherwise, more pressure is still seen towards the downside, and the targets are set 129 and 128.76 seen as the next levels for a test in case of break below the recent low at yesterday's low, pardon, at 129.22. British pound against US dollar is still holding slightly positive tone of recent low posted on 2 days ago at 148.30, as recovery is so far supported by a rising trend line, despite the gains being limited at 149.80, just ahead of psychological 150.00, a level that also marks approximately 76.4% of 150.46 to 148.30 barrier. But so far, positive tone still keeps the upside favored. As said, the trend line hasn't been broken on the dips lower, and the price is currently attacking the overnight's high, which is at 149.54, to possibly open way towards 149.80, and the 150.00, the more significant barrier above which may ease the immediate bear pressure. Of course, completion of the latest downleg from 150.46 on regain of the later would confirm the near-term bottom at 148.30. From the 4-hour chart situation, we can see that indicators are pointing higher, and they are well positioned for some stronger action higher. The 150 barrier is reinforced by 55 days exponential moving average, and this is what I mentioned at the beginning. A break here is to give initial signal, while confirmation will come on a break above 150.46. Daily bears are still in play, although oversold conditions might give initial signal of some more significant recovery. Still a lot of work to be done in order to confirm. At this point, I would say 150 to 152.20 is the minimum requirement to be regained in order to confirm the recovery. Otherwise, continuation of the downtrend is seen as a more likely scenario, as a major break below 152.30 multi-year range floor, and the loss of psychological 150.00 still sees much more focus towards the downside. And the downside targets are 148.00 and 147.80 immediate targets, March of 2010 low, ahead of 142.30, which is May of 2010 low, and that is slowly coming in sight in the near term. Dollar yen is still in the corrective pullback, but the near-term focus is shifted higher, as we can see on the ADX hourly chart that bulls are now gaining pace, and as the price broke above initial resistance, which is around 96.25, this was the congestion of the near-term near-term consolidation above 95.43, where the pullback from 96.70 found support. Focus is again shifted towards the upside, as the current pullback was seen as a minor, rather consolidative than corrective, with the hourly indicators now gaining a positive tone, and opening way towards initial barrier at 96.70. This is the previous high of 12th of February, that break of which to open 97.00, our next target, and then 97.70, another upside level that will come in the near term focus. Daily structure, I do apologize. Daily structure is holding a positive tone, as indicators are in the renewed move higher, and they keep the completely bullish structure in focus. 100, the psychological barrier, is now coming in sight and seen as a near-term target for dollar yen, while back to the lower time frames. Yesterday's low at 95.43 offers initial support. More significant comes at 95.00, and then 94.80, where is the 50% retracement of the upleg from 96.70, and then the previous range tops at 94.50, break of which would signal more bearish action towards the downside, and prevent the pair from immediate attempt towards 96.70 and 97.00. Basically will delay bulls in case of a break below 94.50. Top performer of the previous session is the Aussie dollar, and we're going to take a look now, driven by fundamentals and the upbeat data, employment data that came overnight, pushed the price as high as 103.81, following break above the congestion at 103.34. These are the highs of 12th and 13th of March, with the subsequent pullback seen yesterday being contained at 102.80. keeping the upside in focus as a part of the recovery rally from 102.03 up leg from 102.03 11th of March low, as well as larger rally from a recovery rally from 101.14 low of 4th of March that has so far recovered over 50% of the entire down leg from 105.97 to 101.14. Positive tone is now seen establishing even on the daily chart, though the MACD is still below the zero level, but fresh extension above 50% retracement sees potential for further recovery. Of course, break above these highs, which are around 103.70. These are the mid-February highs. Firm break that hasn't occurred yet. We had the levels cracked by break to 103.81 so far. I would say break above 104 psychological level and close above this level, along with 61.8% retracement at 104.12, and also there is 90 days moving average at 104.05 will confirm the breakout and the open way for a stronger recovery, where we will be looking for a test of 104.50, 104.75 zone ahead of 105 psychological barrier. So far, near-term structure is positive. Note the overextended conditions on the 4-hour chart, as RSI is already pointing lower and attempting below its 7 days moving average, while MACD still stays pointing higher, and the momentum 22 is now pointing lower in the well above 100 line, currently standing at 101.08. Overall positive tone dominates. Initial support is previous high at 103.34, while any break below 103, 102.80 would be risky and would sideline immediate bulls. Otherwise, current reversal should be ideally contained somewhere at or above 103 in order to keep the immediate bullish structure in play for extension towards the previously mentioned upside. The targets, gold is what we said at the beginning, is attempting to base at levels approximately 105.85, 84, following a double rejection at 1600. I do apologize for this mix-up with the prices, at 1600 psychological barrier, and subsequent easing now the threatening current recovery to come back into the previous nearly 2 weeks range between 1587 and 1564 on the downside, though the price still holding above 20 days exponential moving average, and we can see the bullish crossover 20 over 55 on the 4-hour chart that still keeps the upside slightly in focus, as indicators on the 4-hour chart are still holding in the positive territory. Hourly structure is gaining traction and seeing potential for still keeping the focus on the upside. Of course, break above 1600 seen as a minimum requirement in order to refocus more significant 1620 level, which is the recent high posted on 26th of February, and this also marks a 50% retracement of 1684 to 1554 down leg. As said, on the upside, we need to see the price holding above the recent low posted overnight at approximately 1584 in order to keep focus towards the upside. But as said, break above 1600 is seen as a minimum requirement for resumption higher, and a test of 1620. Conversely, break below 1584 and then another significant supports at approximately 1575 would risk test of the recent range floor levels at 1567, 1565, and the spike low at 1561, below which bears will come fully in play and look for a test of 1554 low of 21st of February 2013. And finally, the crude oil that remains well supported for now, as we can see the trend line drawn off of the low at 89.55 still contains the downside, keeps the downside protected. That opens way along with the current rally from the higher base built at approximately 92.00, keeping focus towards the upside targets 93.38, 93.44 to resume the larger recovery rally from an 89.35, 89.55, confirming the formation of double bottom bullish pattern that requires a clear break above 93.40. We have reached these levels, but there is still no clear break. We're talking about previous highs at the end of February, a break of which and another significant 94 level that marks a 50% retracement of the entire down leg from 98.63 to 89.35 is required to confirm, and confirm the higher low at 89.35 for some a more significant recovery that at the later stage may open a 95 zone, 61.8% retracement in the previous range floor, very significant resistance, previous strong support. On the downside, sad immediate support is approximately at 92.00, break of which is to open 91.50, 50% retracement, and 91.00, 61.8%. Also we have the higher base level set approximately 90.80 zone seen as the next. So far positive tone is prevailing and keeps the upside more in focus. We have questions. We have a number of questions. Okay, I would like just to confirm that we have ended. I ended my presentation for now, and now your questions and answers. Buying or selling advices, unfortunately, we do not give on this session. You can refer to the technical analysis part in our website, windsorbrokers.com, and then you will go to the daily market outlook, or how it's called. Let's just take a quick look, and there you can find the direction and the levels, daily market report. So you can find there, you can see it here, levels, direction, suggestions, and the levels to follow. This is the, you can go to resources and then daily market report in order to get a more detailed trading advice and levels for each instrument. This webinar is more sort of information rather than giving trading advice. So if there is any other question, template, okay, the template will send. If you don't mind, you just send me the email, this what you send on the message to the email that you can see on your screen. You will be able to see it in a second. Because once the program is closed, then I will not be able to find it. You can send me at analysis@windsorbrokersltd.com, so I can send you the templates that I'm using. A number of our regular attendees who have already asked for this. So just send me this email that you sent to analysis@windsorbrokersltd.com, and I will provide you with all templates. Is there any other question, please? Even if you are BI, then no problem. I can help you with the various things. I just need you to send me your email through this, through the email, analysis@windsorbrokersltd, and then we can discuss any kind of assistance from my side. Analysis@windsorbrokersltd.com. You can see it on your screen now. This is the one. Oh, this is the one here. You can see it on your screen. Just send me an empty email to have your address, and then I will return to you in shortly. Now you have the email. I sent you my email address, so we can discuss any other question that you have out of this. This is a live session, so this is not the time to discuss this. If there is any other question, please you can send it now. Or we finished for today. Silver, we're going to take a look. A larger picture still shows, I hope you see the screen. Okay, you can see it now. A larger picture still shows bearish tone as shown on the daily chart, as the upside is still limited at 29.35, 29.45. Basically, we are in the sideways movements here, but still negatively aligned. The studies on the daily chart see more risk towards the downside. On the lower time frames, a recovery rally of 27.93 low 1st of March is still in play, though the price seems to be running out of steam, as we are still lacking strength for test of initial resistance. 29.45 is the high of 26th of February, and then 29.58, 38.2% retracement. As long as we hold below this level, more sideways movements. Currently, the rally is still slightly aligned towards the upside, as the trend line contains the downside, the dips, especially the one from yesterday. But now we need to see the break above 29.35.45 in order to confirm recovery. As said, 4-hour indicators are losing traction, and you can see that are breaking below. The RSI is pointing higher, but it's on the lower areas and still holding below the 7 days moving average. As said, minimum requirement is break above 29.35, 29.45. Hourly structure is more negative at this point, and sees more risk towards the downside as long as we are holding below previously mentioned levels. 28.96 is the 55 days exponential moving average initial resistance, as the price is attempting now above 20 days one that's currently at 28.90, and the ascending already ascending is 10 days moving average currently at 28.87. Basically, break above 29 is seen as the initial requirement to resume this bounce of the 28.59 overnight's low. But as said, negative tone is still prevailing on the hourly chart, and still sees, I would say, more risk towards the downside as long as we are holding below 29.35, 29.45. Dow Jones, at what price will close? That's quite a good idea. I didn't check yet the US stocks and indices, but it's quite indicative that Dow Jones is in the strong uptrend, and the fresh high posted at 14.438. I think we have the projected levels. I'm not 100% sure. You can find it in the analysis at 14.470 and 15,000 as the next upside projected targets. You can find it. This will be updated shortly, and you can find the updated levels. But so far as I can see, the bullish structure is quite strong at this point, and sees no obstacles for now, despite daily indicators being quite extended. All are pointing, still pointing higher, and as said, 14.470 and 15,000 I think are the next projected levels for the Dow Jones June contract. Yeah, for 15,000 it's quite likely to be seen in the near term, as we have unobstructed rally since recent consolidation low at 13.745, and this was basically the where the latest leg higher commenced. For now, there is no signals. As I said, most of indicators are still firmly higher. We might see some major corrective action, but So far, strong uptrend doesn't give any stronger signal of reversal. Okay, it seems that we have exhausted the questions for today. Again, for the analysis, more detailed analysis, you can refer to the website and the technical analysis reports there, where you will find much more details. And I would like to thank you all for attending the session. We're back tomorrow morning, Friday, at our standard time, 8 o'clock GMT, 10 o'clock local Cyprus time. Arabic session will follow in a while with the same content. I wish you a nice Thursday and successful and profitable trading. Good luck to everyone.